I thought it might be useful today to talk a little bit about the resilience of the U.S. economy. It's hard to believe that with the decline in consumer confidence, with soaring gasoline prices, and the big slowdown in consumer spending, that the U.S. economy has increased at a rate of 2.5% for the first half of this year. Most of this increase has come from a decline in the value of the US dollar, which is helping increase US exports to other parts of the world. Furthermore, we've had significant increases in the rate of productivity in the manufacturing sector of the United States. It wasn't long ago, probably no more than 3 or 4 years ago, that everybody suggested that the manufacturing era in the United States had come to an end, that all manufacturing was being hived offshore to China, to India, and other parts of the world, which were low-cost manufacturing sectors, and that we all better look for service-oriented jobs because the manufacturing sector had reached its demise. Well, it's interesting to note that right now it's the manufacturing sector in the US that is holding up the US economy. The increases in productivity have occurred because US businesses were quick to respond to a decline in consumer spending in the latter part of 2007. They reduced the number of hours that were worked by their employees, but kept production at a faster clip than before. And that's allowed companies to continue to sell goods, and most of these are multinational companies which are selling goods to other parts of the world which aren't suffering the same slowdown as the US is encountering. So they're selling goods to other parts of the world and continue to generate earnings at a solid clip. A good sign of a slowing economy is usually a rise in unemployment, and we're seeing some of that in the US right now too. In fact, if unemployment continues at the current rate, the US might lose 1 million jobs in 2008. But remember that there are 140 million people employed in the US in non-farm industries. So that's about 0.75%, and it's not going to drive the US into recession. The financial services sector has been the single highest cause of unemployment in the US year to date, and that will likely continue in the months ahead. So despite soaring gasoline prices, rising inflation and unemployment, low real estate prices, and turmoil in the financial services sector, resilience in the US economy from the manufacturing sector is likely to continue and is likely to be our saving grace in the months ahead.